Let's get ready to rumble!
ZingerNation jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Aperna. The best trade idea resource out there. Yo, what's up, everybody? Happy Tuesday. We're skipping Monday this week. We're hopping right into Tuesday. And not a bad day back, is it? Let's do a little bit of a quick market check. I'm going to share my screen here. And you got SPY hanging out in the middle. Let's look at small caps. You know, you got your small caps up almost 1%. We'll look at the triple Qs and NASDAQ down about 0.3. Really not a bad day back. I'm feeling generally very bullish on the market. And I want to start today off like that because I want to crowdsource this one. I want to throw this one out to ZingerNation, guys. I'm curious where you all are at. In the chat, if you're generally bullish on the market, drop me a 1. If not, drop me a 2. I mean, there's just so much money flowing into the market right now. I mean, it's insane. You know, I was went out to some restaurants this weekend, and every restaurant is just like so competitive to hire people at higher and higher rates. You know what I mean? And we're talking $15, $20 an hour starting for some basic food service jobs. And the Federal Reserve, I mean, it's signaled time and time again that markets can only go up. We're not having these 20%, these extended corrections. So I don't know. I was taking a look at the futures last night. They were down a little bit. They were flat, but we're looking decent today. So we'll see how the rest of the week plays out. But generally speaking, I'm feeling pretty darn good about the market. I'm pretty much 100% invested at this point. On the docket today, guys, and again, you're watching the Power Hour. This is the Trade Idea Show. That's what we're going for. We're talking about individual stocks. We're talking about swing trades. We're talking about investments. We're talking about day trades. That's what we are getting at with this show. So if we are not delivering on the ideas, and now I see the crowd coming in. All right, if we're not delivering on the ideas, call us out. You have a mechanism to do it. It's the chat. Everybody can band up, say, this is bullshit. We need more ideas. We need better ideas, whatever it is. And I'm going to flip it right back to you guys, too, and say, drop your tickers in the chat. If you have stocks that you're trading today, things that you're looking at, I want to see them. Let's figure out where everybody's at. I'll give you the tickers that are on my radar today. Let's get it going with AMC. How can we not open it up with AMC? I'm gonna zoom us out. Here's a 1-year chart, daily candles. Yep, it's pretty vertical. Okay, all right. So we're gonna talk about AMC. I also have Uber, Neo, Ford on the docket already. Any other tickers that you guys have, drop them in. We will have some time today to go through and smash through some tickers. But I mean, it's a Tuesday. Shortened week. I think let's open it up with some fun. We're gonna hit our chat challenge right away. I don't know if producer AB is ready for this, but we're just hitting the chat challenge right away this week. We're making it a fun one. No more of these boring. Hey, we're just picking a stock. We're seeing what's gonna be the best gainer or loser. We are running an AMC competition. Let me pull up the link here. I'm gonna get the link into the chat. We'll change these settings. That way everybody on the internet can access this. There we go. ZingerNation is going head to head every single week. What is the best performing stock of the week going to be? Boom. There it is, guys. Link is in the chat. AMC chart is on the screen, on the link. You will see there are 2 columns. There's one for your name, and then there's one for the Friday price of AMC. All right, we are competing. We're crowdsourcing this. We're competing as a group. The question is, at what price will AMC be at this time on Friday? 12:30 Eastern on Friday. What is the price of AMC going to be? Write your name down in column A here. In column B, you're throwing in your price guess. Okay, we'll get a zoom. You can use column C through F for writing a nice message to the group if you're so inclined. I'm going to pull up our AMC chart here. Look at that. 31 bucks. That's what we're hanging out at right now. It was $12 a week ago. So that's what I want. And so, all right, Dylan, in the chat, you're saying YouTube sucks. Hard to find y'all today. Can you clear what does that mean? We need to figure out why it's hard to find us. I don't know what makes it difficult, but I want to understand that better. We need more zingers in here. We need more people voting on this AMC price. I'm gonna look at here's your 1 month run, right? We're sub 10 for a little bit, up to 30. And this is when markets should be fun too. When we're getting back to there we go. When we're getting back to these days where we've got GME ripping again, we have AMC ripping again, you got the crypto volatility. I mean, these are the days that we need a big ZingerNation in here. Y'all better share the stream, like the stream. Again, the price that we're guessing is where is AMC going to finish at this time on Friday? And I'm going to throw some metrics up here. So we're going to have the min, we're going to have the max, we're going to have the median, we're going to have the median, we're going to have the average. Let's see where everybody's at. All right, lowest guess so far, $10. Highest guess so far, I'm going to guess is going to be in the 50s. Let's check it out. 420.69. Okay, that's a high guess. Median. The rest of the crowd's at 28.5. Okay, that's lower. And then average, 57. If I had to throw one way or another, I have to pick that the stock is going higher or lower. I would go higher on a week like this week. I don't think necessarily a ton higher. But again, if I had to pick one way or another, higher is the direction that I would throw it. Keep dropping in those guesses, guys. We'll give it another 30 seconds here. For anybody who's joining us late, link is going into the chat. We're competing for some bragging rights this week. And of course, we'll get some Benzinga merchandise shipped out to your house. But where are we going to finish with AMC this week? I'm going to pull the chart back up on the screen. This 1 month run is amazing. I mean, if you look at it on a 5-day basis, it's even more incredible. I mean, there's 14 to 31. Well, let's see where everybody gets to on this. We give it a couple more seconds to drop in here. And guys, if you are just joining us up on the docket today, we did an options week last week where we made some live options trades on the show. We talked about how these trades function. We're going to be checking in on those. The options trades that we made were on NIO, Uber, and Ford. So those are three tickers that we're going to look at. If anybody has other tickers that they want us to look at before we get to those, drop them in there. In about 20 minutes from now, stay tuned. We're having the CEO of Alkaline Water Company hopping on with us. Very interesting stock. They recently signed an endorsement deal with Shaq. So we're going to be asking what it's like to work with Shaq and where he came from and how he got involved. But again, guys, final guesses on the AMC. I'm going to pull producer AB in here. I see him hanging out in the background. All right, so producer AB, we're opening it up with some fun on a Tuesday, a short week Tuesday. We're making people compete for where is AMC going to finish this week. We've got a min price of $10, a max price of $420, median 37, average of 50. Where do you land in there? The stock's in the 30s right now. I could picture it in the 40s before the week is up, but where are you at?
I agree. I mean, I think as we get this upward movement, we'll see some more. You know what's interesting, Luke? This morning on live trading with David Green, he uses Interactive Brokers.
Yep.
He was unable to open any short positions on AMC.
There's no borrow?
Yeah, Interactive Brokers took off the ability to short the stock.
Well, I don't know. Did they take off the ability to short it, or is there just no shares available? Let's look.
Well, it opened back up this morning while he was trading, but like at the open, he said he was unable to.
All right, let me see if I can load up an AMC ticker page here.
But I was going to say, I think as we see this upward movement, maybe some people that haven't learned their lesson may try to open more short positions, which could cause it to keep going up. I think I agree with you. I think it could be in the 40s by the end of the week. My final guess will be $44.33.
All right, so you're a little bit higher too. All right, guys. Here's a quick look at short sale availability on AMC, ticker Alpha Mike Charlie, our favorite movie theater chain. Right now, there are only 6,000 shares available to short. That may sound like a lot, but I mean that's really nothing. Check it out. If we look back over time, so we're looking now at Friday. On Friday, there were 500,000 shares available to short. Now we're down to this measly 6,000 that's available. I mean, let's look further back historically. Mean rates. Okay. The cost to borrow. So if you want to short a stock, let's talk about the mechanism of shorting for a second. So if you want to short a stock, you're betting that the stock goes down. And how do you do that? You sell something you don't own, and then you buy it back at a higher price in the future. So, for example, if producer AB is my broker, I say, producer AB, I want to short 10 shares of AMC. He gives me the 10 shares. I sell them. I sell them, let's say, at $10 a piece. I collect that $10 right away. I still owe him 10 shares. I don't owe him the $10 that I sold him for. I owe him the 10 shares. If the price of AMC goes down to $8, I buy back those 10 shares for $8. It's a $2 spread there. I return it to him. I keep that $2 profit. And so whenever you're shorting a stock, you have to borrow those shares. The cost to borrow, it's looking like it's 26%, which is astronomically high. And then again, there's only 6,000 shares available. And let's pull up Apple in comparison to this, just so you guys can see how extreme this is in comparison. So AAPL, Apple. All right. Well, how many shares were available to short for AMC, producer AB? You remember that number?
About 6,000.
About 6,000. Apple, how many? Guess. Don't look.
24,000.
464 million. Okay, so when I'm saying that there's only 6,000 shares available to short on AMC, and that's a low number, I mean, compare it to Apple. It's sort of the other end of the spectrum, but 464 million is the comparison. The cost to borrow Apple is 0.25%. So if you want to short Apple, it's going to cost you 0.25% a year. You want to short AMC, it's going to cost you 26% a year. That's an air horn. That's the first air horn of the day. Damn.
How do you feel about Apple right now? Because a lot of people are calling it dead.
I will never bet against Apple. At least not for a long time. Here's a 1-year chart of Apple. Daily candles. Is it moving sideways while the market is pretty much at all-time highs? Yes. You do at least get a little bit of a dividend out of the stock. It's not a ton. You get like a 1% dividend. It doesn't do much for you. But I don't know. I mean, it's a stock that has such a long history of outperformance. I mean, here's a 10-year chart of Apple. All right, let's go even further back. I mean, there's all the way from the 80s. I mean, since 2005 on, I mean, the stock has outperformed or had positive performance pretty much every year. I think it's a hard stock to bet against.
Yeah, the way I feel about it,
maybe for a swing trade, maybe hit it on a swing trade. But long term, I mean, I wouldn't be betting against it in the long term.
I feel as long as Berkshire Hathaway has it as their biggest holding, which I believe the company still does hold Apple as its biggest holding, then I like it. If I see Berkshire start selling their Apple, as we've seen Kathy Wood do with ARK, then I might feel a little bit uneasy about it. But for right now, I'm long and strong Apple.
Long and strong Apple. All right. Let's grab some tickers out of the chat. Let's do SPI, and then let's do BlackBerry, and then up on my radar to get you next, we have Uber, NIO, and Ford. I'm going to add Rocket to the group list as well. We had some folks in the chat asking about Rocket. It's a stock that we both know very well, so we'll do that one. I mean, SPI Energy, let's see what's going on. Is there news? Not a ton. Announced a new CTO. I mean, it's a hell of a move. I'm going to zoom us out a little bit. Here's 1 year daily candles. Okay, that's impossible to use. There's 3-month chart. I don't know. If you know what's moving SPI Energy, let me know. I mean, this could be like a Twitter influencer type deal. And then let's look at BlackBerry. Of course, moving in sympathy with the rest of the group. Let's recap. When we had GameStop happen and we had all those other stocks start moving, let's just go ahead and drop down all those tickers. That way everybody's aware of them. I'm going to miss some guys. So I'm calling on ZingerNation in the chat out there. Another air horn. Drop in these other, GameStop, AMC related tickers, the ones that moved in the past, so we can all find some opportunity there. But of course, you had GameStop, AMC, you had Naked, ticker NAKD, you had BlackBerry, which is ticker BB, you had Tootsie Roll, which is ticker TR.
We had KOS, KOSS.
KOS, KOSS, that's a good one. Nokia, there we go. Now ZingerNation's coming through.
Haven't heard that one in a while.
I know. Dude, they're back.
You know what else is hot right now that was moving this morning? I haven't checked on it all day. Is AHT.
All right, hold on. Let's let's look at this BlackBerry for a second. Just the comment that I have that I think is interesting about BlackBerry is that AMC is so far into a high, right? Like it's so far above its previous high. BlackBerry is still only at $11 out of the $28, $29 high that it made previously when we had that run at the beginning of the year. I think it's sort of interesting. But which was the ticker that you just dropped?
AHT. That's one that's getting picked up. Or no.
I got you. Yep. I got you.
Oh, wow. I looked at it at the open today. It was up 8%. Now it's up 22%. This is one that's getting picked up by some, we'll just say Twitter influencers.
All right, let's look at what this company does. Ashford Hospitality Trust is a real estate investment trust that invests in full-service upscale and upper-scale hotel properties in the U.S. So it is okay. So basically, it looks like they license and then operate hotels with the brand names Marriott, Hilton, Hyatt, Crown Plaza, and Sheraton. Do you have insight as to why?
As to why it's moving?
No. I know you said why it's. Is it a REIT? Is somebody's asking in the chat? Yeah, it's a REIT.
Yeah.
The chart does look good. I see the chat saying that too. I mean, it's going for sure.
What was it at before COVID?
I'm looking. I'm zooming us out. Way higher. This is 1 year ago. We go 2 years ago. Now pre-COVID. I mean, it was about a double.
I mean, well, let's look at their financials. So we're looking at we'll do.
All right, financials quarterly. Oh my God. So pre-COVID, it was doing $280 million a quarter, made $350 million a quarter. 43, 93, 90, 115. I mean, it's picking up. And it's still a long shot off of where it was. But I'm curious. I want to see if it pays a dividend. My trusty Benzinga Pro will tell me, nope, they stopped paying a dividend a couple years ago.
Which that's pretty atypical.
So you're saying this is one that's floating around Twitter. Is there a rationale as to why? I see Justin in the chat is dropping that it's a reopening trade. I don't know if there's more of a thesis than that. Like, have you seen anything else?
No, I mean, I think just the common thought process, going on here is that it should go back up to its near its pre-COVID highs, because as we see the business filter back in, there would be essentially no reason that it wouldn't continue trending up that way, unless, of course, they had to sell
to infinity and beyond.
Boom. And I see somebody in the chat saying that Hilton had a 93% capacity filled this weekend. I mean, that's high. That's high. All right. Yeah. That's a good one.
Well, Luke, I was going to ask too,
go ahead.
Have you been to a movie since that a couple months ago? You went to an AMC and it was completely dead?
The last movie that I went to, was when I went to a movie at an AMC for a birthday party, and we were the only ones in the theater. That was probably 2 months ago.
We should do it. We should do some, recon, go to an AMC, see what it's like, see if business is picking back up.
I mean, you're in Detroit for a reason. The last time that I went to the AMC movie, right, we were the only ones there. It was amazing. I was dead tired. It was a Friday at like 6 o'clock, 7 o'clock. I was dead tired after the week. No sleep for a couple days before that. I just passed right out. Got into the theater, fell asleep 10 minutes in, woke up with 10 minutes left in the movie. I'm like, yep, all right, that'll do it for me. It was a good experience.
Yeah, and more people in the chat are talking about Hilton's having the best booking since the pandemic hit. I do think hotels are really interesting because another thing that's going on right now, Luke, I don't know if you've seen this, but Airbnb is catching a lot of flack for their, kind of misleading with the price they list. Then you have all the fees. I don't know if Spencer's around, but Spencer said he dealt with that this weekend where he was traveling. Airbnb said one thing, and then you go through the process, and all of a sudden it's really like double what you said you were going to
That's whatever. Hotels are the same thing too, right? You see a hotel listed $149 a night, and then you have to pay $20 of taxes. You pay $20 for this. You have your sales tax, and it's like another $40-$50.
Is there news on
I think it's whatever.
Why Airbnb's up?
Hilton, dude. Travel. It's that general Hilton number. That Hilton 93% booking number is going to move the whole sector.
But are you still, Luke, kind of over, you're done with the reopening plays?
Yeah, I'm pretty over the reopening plays. All right, let's look at HLT, which is the ticker for Hilton. We're going to zoom it out to 2 years. The stock is already so far above of where it was pre-COVID. That's why I think a lot of this move is up. I mean, is this thing going to double again over the next couple of months? I mean, that's what the hopes are, right? That's the speculation that you see online as people are saying, it's at 125 now, this thing's going to 250. I mean, it's already 20% higher than it was pre-COVID. That's why I'm sort of over these reopening trades.
But then there's got to be
a reason. The reopening trade was 6-12 months ago. I mean,
there's got to be a reason the AHT stock isn't at its pre-COVID levels, even though it's in the same industry.
Well, we'll have to dig into it.
We'll dig into it. We'll get some more info on AHT tomorrow.
All right, and then let's grab one more out of the chat. Rocket Companies, ticker RKT, Romeo Kilo Tango. Here's a 1 month chart. I mean, this is not super interesting looking chart. No news, boring chart. I don't know. That one doesn't do a ton for me today. We haven't talked about Rocket in a while. I still like the stock a lot. Do you?
Yeah, I mean, I think, a lot of people kind of flock to the UWMC, United Wholesale Mortgage. I like Rocket's business model a lot more than UMWC because Rocket does, I mean, they have a wholesale kind of corporate mortgage sector of their business too, correct?
Correct.
And they do that on top of course, being
the retail,
the residential leader. And I think they do a lot with their technology to make it really easy to make the process. Because in the past, getting a mortgage, and I'm not speaking from experience because I haven't yet, but I've heard.
When you got your first mortgage in the 90s, it was a pain in the ass, right?
Right, and then Rocket makes it way easier.
Nice.
Apparently.
All right. Ruel in the chat is throwing in lots. There's a lot of lots bag holders. Ruel is clearly one of them. He's just exposed to us. All right, I'm going to ask this to everybody who has lots. If you have a reason to still hold lots under $5, tell me what that reason is. Like, I want a reason to love the stock. But I mean, but going back to Rocket for a second, I mean, the stock has a PE ratio of about 8, right? Price to earnings ratio of about 8. If we compare that to the S&P 500 average, it's 45, right? So I mean, I mean, you can do the same thing. Price to sales, the numbers look the same. EV to EBITDA, those numbers look the same, right? If you just look at it on a pure fundamental ratio basis, it's a cheap stock. So then the other thing to go to is there some reason to think that sales are going to decline into the future? And I don't think that there really is. Interest rates aren't going to go up. I think that there's no way, given this inflation-laden world that we're in, there's still a big chunk of the population that's out of the workforce. I mean, I think that there's no way that interest rates go up into the near future. It would crash the market. And the Federal Reserve, again, like we said at the top of the show, has signaled to us that the market can't go down. It's staying steady. So low interest rates, value stock. I think, again, we're in this inflation environment. Housing prices are going to go up. So I don't think that there's a ton of a reason for sales to decline on these stocks.
Yeah, I mean, wait, do you have lots pulled up right now? I'm still seeing Rocket.
No, I saw there's Rocket. All right, let's look at lots. All right, I mean, it's up 12%. So are all the rippers today. Again, the challenge that I threw into the chat was all of you who have lots. I know there's a lot. All right, let's ask it. If you guys own lots, ticker LOTZ, drop me the 1 in the chat. If not, drop me the 2. I want to see where my lots shareholders are. But tell me why you like this stock. I generally like the used car market. PRTS, carparts.com. That's the one that I'm in, right? That's the play for online car parts. It's a market that's still so much done in person at service centers. Only 3% of it is online. The company's been on fire. It's putting up 90% year-over-year growth. The stock price is moving with it. So I like the thesis of the used car sector. But I mean, Lots has just been such a freaking underperformer. I just don't have a reason to get behind this thing. Here's a 1-year chart, daily candles.
Yeah, and Luke, my opinion on these is I have faith in the kind of the supply chain. I know we've seen a slowdown in production of new vehicles because of the chip shortage, all of this, but I feel like anytime something like that happens, where say there's a chip shortage of semiconductors, and all of a sudden Ford or whoever it is can't produce as many trucks as they were going to. Our system, I feel like, resolves that pretty quickly. I mean, we saw at the beginning of COVID, it's not exactly the same, but remember when everyone was freaking out about toilet paper?
Yes, of course.
And did that
How could I forget?
Right.
Every day, producer AB, you were calling me. You're like, oh man, I can't get the toilet paper. I'm worried. I'm stocking up.
And that's what, and that lasted for about a week. And guess what? The supply chain came through, as it always does. Our systems resolved that worry. And I think that we're going to see the same thing here with cars. I think we're going to see the production of cars start going back up. And hopefully, that will maybe start driving the price of used cars down as we see more come in. But yes, for right now, it's a tough market out there. I was just in the market of getting a new car, and it's a tough market right now.
Were you shopping for a used car?
I was shopping for a used car. And,
okay, and what happened?
It was ridiculous. I mean, I was looking at like 2015 Camrys that should have been like 10 grand maybe, and they were like 15. So it was insane. I ended up having to do a lease of a new car where I'm just paying it monthly, like a few $100 a month, because I couldn't afford a used car.
There you go. All right, but again, we see other used car stocks. Here's Carvana. Here's 1 year Carvana, right? Chart doesn't look amazing as of late, but it looks fine. It's holding up, right? It's sort of like similar to that Apple chart. Compare that to a car lots, it's just brutal. I know that people say that they love the business for the long term. I like the sector as a whole. I mean, what I understand of the business seems like it makes sense. There's just this chart is so brutal. I need to see some life get into it. Let's fill some of these gaps, and then maybe I can throw some money back into it.
Yeah, I mean, I'm with you on that. I don't love lots right here. So anytime you see a stock that's in a sector that's showing strength, but the stock itself isn't showing strength,
that's tough, man.
That's a big red flag for me.
Yep.
If all technology's ripping, but say Twitter or something isn't doing well, then that's a sign to me that the stock is just not showing. We talk about relative strength a lot. That's relative weakness. Lots is showing some relative weakness here.
Exactly. So all right, guys, if you are just joining us, let me give you a preview of what is to come in these next 30 minutes. This is the Power Hour. That means this is the Trade Idea Show. That's what we're going for, guys. We're trying to keep the ideas flowing. We just hammered through a ton of tickers. We still have to get through the 3 that are on my list to talk about today. We've got Uber, NIO, and Ford. Those are the 3 stocks. We've got some open options trades on. We're going to look at those options trades. We're going to look at the P&L on them. But before we dig into that, we're going to bring a pretty interesting company on the screen with us. You want to give us a little bit of a preview for that, producer AB? Let's
do it. Yeah, we got Alkaline Water Company, ticker WTER.
Pretty damn good ticker.
I love tickers, that relate to the business. It just makes me happy. And
my dream job is to name ETFs. I want to be the guy who's like saying, okay, this gold ETF is going to be NUGT Nugget. All right, that's my dream.
What are your top? I mean, we obviously have the Round Hill sports betting one. That's BETS, BETZ. Oh, you want to know one of my favorite ones?
Yeah, let's hear it.
I forget who it is. It might be Direction. The home building one. The ticker's NAIL. NAIL.
All right, wait. I gotta look that one up. Whoever named that? That's Direction. Let's go.
Yeah, I thought it was.
Big
Direction.
shout out our friends at Direction. Yeah, so
that's a great one. You have the energy one, Gush.
Gush. Okay. Yeah. For
Which
oil.
like that's just like oil gushing. Yeah.
Yeah.
down the
Yeah. No,
pipeline.
it's another good one. There's
like
a lot of
that.
good ones out there. All right. Well. Let's bring water on here. Again, we bring you guys interesting companies, so stay tuned. All right. What's up, everybody? On the stream with us now, we have Alkaline Water Company CEO Ricky Wright, Chairman Aaron Keay. What is up, gentlemen? How are you doing today?
Great, thank you.
Really good.
Absolutely.
Thanks for having us.
Absolutely. I appreciate you joining us. We were just doing some chatter about your ticker. It's great. Ticker WTER Water. We always appreciate these fun ticker symbols. But before we dive into it, for those who aren't aware, can you talk to us about what Alkaline Water is and give us a little bit of a background on the company?
Sure. Alkaline water is water that has a higher pH. The popular press will tell you that it helps all kinds of things. There are a couple studies out that says it does help with some acid reflux. So, it's a water that hydrates better at the end of the day. And speaking of labels, we named it Alkaline 88 to begin with. We trademarked it so people knew 7 years ago when the only thing that was alkaline was a battery, that this was actually water. So for 6 years, we had alkaline and water on the label, and we own that trademark nationwide. The company has grown from zero to we'll probably do close to 100 million retail this year. So we're very, very happy with the growth, and we're only about 8 years old. And candidly, Aaron was one of my first investors.
Awesome. And can you talk a little bit about what goes into making alkaline water? Is this something that's pulled out of the ground, or can you just describe how exactly the product itself is created?
Yeah, we use an ionization process. In fact, we again trademarked ionized H2O. We have a machine that is, we put purified water. So any source, we can use municipal, we can use lake water, stream water. It doesn't matter where it's coming from. We put it through an extensive filtration process. We put it through, and then we only use 2 ingredients. This is what makes our company unique. We're a clean beverage. We only have 2 ingredients: purified water. There's an FDA or guideline on what that's defined as. And then we add a little bit of pink Himalayan rock salt for the electrolytes and flavor profile. And so we get a deliciously smooth water when you're all said and done.
Okay. And through what channels are you guys selling?
Primarily through the grocery channel.
Okay.
We have begun, I just got an update. I think we're scheduled to try to be in 25,000 convenience stores by this time, 2022. We're in about 13,000 right now. So we're on track.
Okay. So it's about doubling. And you said that's over the course of the next year is when you're going to reach that 25,000 mark?
25,000, what you and I would call traditional banners. We're in Walmart, every Walmart. We're in CVS. We're in Rite Aid, we're in Kroger, we're in HEB, we're in Albertsons. So, pretty broad banner reach throughout the country.
Okay. And can you talk a little bit about how big the market is now, or how big you picture the market getting? Obviously, everybody drinks water. There's no doubt about that. But I mean, how big can the alkaline market specifically get?
So we just read a survey put out by Beverage Marketing Corp that by this year, they believe that market will be 100 billion. So it's up tenfold. Wow. 1 billion, It's up tenfold really in the last 8 years. So
okay.
It's about 100 million 8 years ago, and now it's scheduled to be over 1 billion this year.
And is it like a move towards like is it health conscious people who are driving that market and choosing to use these products, or what exactly is driving that 10x market growth?
It's hydration. I think Aaron can speak to this better. I mean, one of his favorite sports celebrities is a big alkaline diet guy. Why don't you take this one, Aaron?
Well, he's talking about Tom, but Tom isn't an ambassador for us, but Shaquille is. But I guess the best way to put the category, and when you look at it, two big things have happened in the last couple of years. Global beverages entered the space with the acquisition of Essentia by Nestle and the purchase of Core Water by Dr. Pepper and Keurig. And you've also seen Coke with their Smart Water actually complement what we've done and actually name one of their Smart Water products Alkaline. So you've got the big boys coming into the category, and the Essentia Nestle one is so real and recent that obviously it's a good shot in the arm for the category, and I think it remains one of the fastest growing categories of beverage.
Okay, and Aaron, you alluded to Shaq You guys recently announced a deal with Shaq. Can you tell us about that? What that does for the brand? How you're working with them?
Well, first and foremost, we've done a phenomenal job with the brand. Ricky and the management team have done an exceptional job getting the brand to doing what it does on an annual basis on top line sales with very little in marketing. We've really never done the traditional marketing. You haven't seen us on commercials or billboards or streamed in a heavy amount. Bringing Shaquille on with the brand that he's created with a lot of the different partnerships that he's created through the Authentic Brands Group, I think it's time to see our brand go to the next level, with an endorser like him and his personality.
Awesome. And what exactly is Shaq going to be doing for you guys?
So it's an initial 3-year deal, but if you look at the history of a lot of his contracts, take Icy Hot as a great example, it's become almost a lifetime one for him. So assuming we continue to execute as we have, he will do, the full gamut of basically brand ambassadorship, commercials, and, really, I guess, pushing the product because how it came together naturally was he liked the product first and foremost, and that's how the relationship originally developed.
He's also on our advisory board, which, if you've never met Shaq in person, the guy is a genius. That doctorate degree is a real PhD, and, creatively, he is just a pleasure to be in the same room with.
Well, yeah. Okay. So Ricky or Aaron, can you dig into that one a little bit and just tell us what it's like working with Shaq?
He's big.
Is he like I've seen him on TV. Okay. He looks big on TV. Does he seem bigger when he's in the same room as you?
I like basketball. I can't, and I'm not much shorter than Steve Nash, another good Canadian. I don't understand how Steve Nash went to the hole and got the ball in the bucket when I look at the size of Shaq when we met him. But to answer your question about what it's like to work with him, it was really surprising sitting down and the time that he spent and the energy that he put into actually understanding the brand and the business and his creative ideas. Just look at Papa John's, look at Epson, look at all these other companies he's working closely with. He's a big part of actually the creative process to what we're seeing out there because I think he's picking brands that he cares about. And that's what mattered really to us as we went down that path of looking at ambassadors and so-called influencers.
Okay. Shifting back to the company a little bit, I've seen on store shelves like CBD waters popping up and other water varieties. Can you guys talk about future markets, how you could be getting involved there, or if you're just focusing on the core products, but any other sort of varieties that are interesting?
Yeah, no, it's a really good question. We've done a thank you very much, like the water plug. It is one of those things that we are about brand extensions as well. So, I held it up earlier. We were the first company national company, 75,000 stores to go out with an aluminum bottle, fully eco-friendly. I always tell you, put this in the refrigerator, let it get chilled. You'll never drink a beer again. It's that good. We've also done our flavored waters. And then we've got a CBD water that's also in the market. And, right now we're limited on some of the FDA guidelines, but we will continue to expand. I mean, because we're a water company, our CBD business really is water plus powder packs, water plus gummies, water. But we're always leading with water in virtually every environment, every channel we go down.
Okay, excellent. And let me ask you each one more question. I always like to ask this one, but if you had to name one thing that you're most excited about for the company, what would that be?
Go ahead, Ricky.
I think in a word, it's the Shaq relationship. We get Shaq, we get Authentic Brand Group. We've, as Aaron alluded earlier, we really had no budget. Okay, we really been an underappreciated stock as well. I always tell people I think we're the most undervalued company in the country. If you know how beverage companies get sold, they're sold on a multiple of sales. We're selling about 2 times sales right now. Most growth companies get a 4 to 6 to 8 to 11, candidly. And so we're very undervalued. And I think that Shaq and the awareness that the ABG group is going to give us is going to help us get to where we get the next level.
Excellent. And Aaron, how about you? Anything to add on to that?
Yeah, I mean, I'd love, it's a passion to make this a household brand. I mean, hopefully your man here continues to drink the product as he is and he enjoys it.
There you go. Producer AB, air horn for that one.
It's really good, I got to say. And after a long weekend, it's nice to try to get, the internal pH balance back to level. So
We make no health claims.
Yeah.
Health cleanse. Health cleanse. You said.
Yeah, so we make no
Claims.
health claims.
We make no health claims.
No
yeah.
health claims. Got it.
So cool. Awesome, gentlemen. Anything else that we missed or we should make sure that we touch on?
Aaron?
No, I enjoyed it. Thanks for the time, and hopefully we'll do it again.
Awesome, guys. I appreciate you hopping on with us. Again, guys, the ticker is WTER, like water. We appreciate our fun tickers on the show. And yeah, let's stay in touch. We definitely want to bring you back on whenever you have updates or interesting things to share with us.
Sure, maybe we get the big guy on someday too.
There we go. All right. Yeah, we'll have to like fly producer AB out to him so we can see how tall he really is in person.
Yeah, we'll do it.
Cool.
Thanks, guys.
Thanks. Great
All
day.
right, take care. All right. Producer AB. So you had the water ready, or was that in preparation for this, or are you just an organic user? What's the move?
I just happened to have this in my car, and actually I was worried. The reason I didn't grab it earlier was because I was worried it was like a different brand. But then I saw the 88 on theirs, and I was like, no, that's the one that I have in my car. So I had to go run out and grab it.
Okay, there we go. All right, so there it is. I'm gonna drop this one out to the chat too. If anybody in the chat is an alkaline water drinker, drop me a 1. If not, drop me a 2. I haven't tried it yet. I guess I'll have to give it a go.
Well,
save me a cup. Pour me a cup after this, producer AB. All right.
I will. And it's been for me. It's been kind of like a fad that I've been aware of for a few years. Because a couple summers ago, I had an internship in Los Angeles where I was working for a film production company.
Okay, trendy place.
Yeah, and that's where like a lot of trends start in LA and then they go across the country, whatever. And every single set that we had where we were working with different musicians, different rappers, all of them requested, like we would have like a box of Aquafina or whatever. They'd be like, no, you need to go back out and get alkaline water. And at the time, I had no clue what it was. So that was my first introduction to it.
All right, that's interesting. Jason's joining us just as I was just about to drop an AMC price check. High a day right now. It's going, baby. It's going. What's up, Jason?
I own 5,000 shares of AMC at $6, and one of our old employees said AMC is the biggest dog in the world.
Who was it? Put him on blast.
You know who it is.
Okay.
Works in the movie theater space.
Oh, yeah. Okay. All right, you're going way back in the history books for that one.
No, recently told me that.
Yeah, I mean, I don't doubt that. It's just
5,000 shares times my calculator said I would have like a couple 100,000, you know.
Oh, so you dumped it?
I got
No, I kept a little bit. Come on. I don't want to get the haters, buddy. Come on.
There you go. All right. High a day on AMC. Let's
No,
go.
but that's not my worst. My worst is BGFV. BGFV. I own that at 189. Sold it at 268. It's at $33.
Oh my
today.
God! It's doing another run today.
What's it doing today?
Another 8%.
Yeah, I mean,
Here's a 1-year chart of it. Zoom
I
out.
bought it at 189
Whew.
and 164. So put that up in your put that in your pipe and smoke it. It was my Penn National trade. I was trying to find a low price stock that hasn't taken off yet, that people say, oh, it could go bankrupt. But I knew better, and I just didn't keep it long enough. I sold all of that at under $3.
That's the way it goes. But you still have your BTN. That was the one you gave us just like a month ago.
Yes.
Look at that 1-year chart. I was looking through my positions this weekend. I'm like, holy shit, Jason's BTN is up 80%. I got to thank him for that on Tuesday.
Well, that's BT. What about FGF?
FGF? Okay, I didn't buy that one.
That's the sister.
Yeah, and ZingerNation.
That looks nice.
Look at FGF. Look at FGF. I mean, seriously.
Send Jason a check if you followed him into some trades. Say thank you.
Yeah, exactly. Send me a Venmo payment. You know, I'm gonna eat some food. So what else? We got producer Bree. Any big guests today? Any new more? I saw the water interview. What else?
Sort of interesting.
Yeah, that was the only one.
They gave us a sneak peek as to what it's like to work with Shaq. So that was pretty cool. They said in person he's even bigger.
Anything else?
From the
from the interview? I mean, it's an interesting.
No. Anything else about working with Shaq?
They said that he said that he's actually a genius. Like when you're working with him, like he's very smart. And that like when he gets onto brands, he just latches onto them. You know, of course that's what they want, right? If they've got a deal with Shaq, they'll help get the word out about there. But they said like he truly really latches onto brands when he starts working with them. I mean, talk about an incredible career after basketball. I mean, it's got to be one of the best. It's like The Rock after wrestling, like one of the best of making that transition.
Yeah, no, true. There's a lot of new people in the office. I think we should have a new person come on every day who's new in the office.
I like it. They have to tell us something interesting, either like about Benzinga or themselves, like working with Jason. It sort of smells, or some fun fact about themselves, and they should give us a stock pick too.
Like I'm sitting next to a guy. I don't even know who he is. He's just sitting here. He may not even work here. I don't know. Maybe he just came in. I'm not sure. But if he comes on the show, then I'll know who he is. You know what I mean?
Exactly. Yes.
Yeah.
We should do a vlog episode of all the new people, all the interns.
Well, that would be too easy for Rohan, but he doesn't like easy. He likes to like do pranks on me.
Yeah, that's true.
You know. So
all right.
Luke, you have a date to go to?
I got a date. I'm going to Nigeria.
What day do you leave?
And at 1:00 today, I'm going doing a webinar for one of our brokerage customers, one of our API Benzinga News customers out of Nigeria. It'll be a fun one.
You guys know I've been telling you to buy USDC for cash, and I love looking at the early, the brokerage statement today when you see the interest deposit. I mean, it's a lot of money. USDC.
Yeah, it's serious.
Yeah, I know.
Did you see that email I sent you?
I know Luke's a hater of USDC, but
a little bit.
What I want to do, put another 500 in, but no.
No, there you go.
Yeah, Benzinga news on AMC. I know what the news on AMC is. AMC to the moon, right? That's the news. There's a lot of devoted people in AMC, and it's
we did just have this headline hit. I pasted in the chat. I'll share my screen really quick, and then I really got to hop off in a second here. All right. News coming a second ago per our trusty Benzinga pro.benzinga.com. Get a link in there, producer AB. But Bloomberg reporting that Moderate, that the hedge fund that got into it today is telling their clients the stock is massively overvalued. And it said to sell its entire stake. That doesn't make a ton of sense to me, because the headline that got it moving this morning was that AMC raised $230 million through a private placement with the company. So it sort of seems like some conflicting reports here, but there it is on the screen. Not coming from Benzinga. We're reporting on it. It's coming from Bloomberg. So there you heard their way, but that's what the headline just out is.
It doesn't make sense. It's contradictory because they bought it.
They bought it this morning. The report came out that they bought it this morning.
There's covenants whenever you do a debt deal. There's covenants, and you can't trade it for a certain period of time. You can hedge, but you can't trade it. So something isn't. I don't know. We got
Yeah, Chris Petrescu in the chat is saying that sounds fake.
Well, you should have Chris Kaji reach out to Mudrick, or have Shubs reach out to Mudrick and reach out to
Adam Eckert if he's listening to this right now.
Yeah, Adam Eckert, he's probably listening. Have him do that now, baby. We need to break this. Let's go. Where's the Benzinga news desk? We got 60 of you guys now. Where the heck are you on this? Zoltan.
Let's get on it.
Zoli, what's he doing? He's in the
office. Talk to the hedge fund. Let's get to the bottom of this.
Zoltan, he refuses to sit near us, Luke, though.
I know.
I don't know how we do that. He's like, "Oh, I have a chair. It's coming about. They're going to bring it in from Italy." I mean, so one day.
I know.
Day.
He's a particular guy. Okay.
He needs that soft chair. I get it. All right. The sun is out.
I'm going to Nigeria. I'm going to leave the show in your trusty hands, guys. Peace out. Happy trading. So let it ride this week.
All right, guys. Get out of here, Luke. Come on. I need control. Go. All right, guys. Here's what I need from you. I want you guys, interns are working around their lunch. Yeah, we brought in Taco Bell for Luke. Today.
But you know what he did? He went to Jimmy John's right before I got here.
Why?
I don't know. He was the one that wanted Taco Bell, and then he went to Jimmy John's.
What? How does that make any sense?
I don't know. He said he forgot about the Taco Bell.
Didn't Sharon remind him?
She was supposed to.
That really is weird.
Yeah, I don't know what's going on.
Should I message Sharon and get down to the bottom of this?
I actually don't think it was on Sharon, but I think Luke just completely forgot. But I'm not gonna speculate anymore.
All right.
Wait, what does Zoltan say? No, I did not. What is he saying that about?
No, I did not. Who knows what he's saying about? This is the whole method of pronouns and not, I don't know. Like maybe no, he did not get a chair. Maybe he didn't refuse to sit next to us. You just don't know. It's playing the guessing game. What do you guys think Zoltan is saying? No, I did not to. I don't know. I wrote to Sharon. Sharon wrote, oh goodness, that is odd. What?
That was quick though, that she responded that quick.
Hold on. I'm going to see if Sharon can come on live right now and we can discuss this. That could be a really good segment.
We also, we were supposed to do a segment with Sharon, like that's like a wait what segment where we explain something to her in the stock market, like in layman's terms, to where she could understand it.
Okay, so I think she's coming on, and this should be exciting. You guys, this will be Luke. Why did you get Jimmy John's if we had Taco Bell for you today? Why didn't you know it was coming?
It was rumored.
Sharon didn't tell you?
It was rumored.
Luke is saying it was a rumor, but he didn't know it was coming. All right, here we go. We got Sharon. Hey, Sharon.
Hi.
Hi, this is Sharon Shabib. Soon she'll get rid of that last name, maybe, or she'll keep it as her middle name. One of those two, like one of those weird girls, keeping the middle name, the last name. I guess not weird, but anyway, why did Luke go get Jimmy John's if you got Taco Bell for him?
I'm not really sure. He did say it was potentially for other people. Like he was like, it'd be really fun in the office on Tuesday. I don't like where my camera angle is. To get Taco Bell. So maybe he was kind of thinking about it for other people and forgot about it for himself.
Okay, maybe.
That's just the type of guy Luke is, always thinking about others.
Aaron, you got to talk closer to the mic if you want to talk, buddy.
Sorry about that.
It's all right. He said that it was rumored, but not official. What say you?
What say you? If he asked for something, I was going to do it.
So why do you think it was rumored, not official? I don't know. What's his deal? We're going to have to reprimand Luke on this. He didn't know it was official is what he's claiming in this discussion, but correct, Luke?
Maybe we should have brought him a whistle.
Brought him a whistle?
All he needed to make it official is a whistle.
Oh.
So like maybe someone should have dropped a whistle over to him and been like, hey, it's official.
That was a good one, Sharon. Wait.
All right. Okay.
Raz, I was telling you about the idea that Sharon had for like a wait what segment.
I know. We're going to do it now.
Right. So Sharon, do you know why AMC is moving, why it's trading so high?
We're doing a wait what segment, Sharon. This is teaching you the markets.
Yeah.
Aaron Bree is going to do it with you right now because my face looks way too big on the camera when I do the two screen.
No, I have no idea. Can you give me like an A through like B, C, and I can pick one?
Yeah, so here I'm going to pull up the chart on Benzinga Pro. So it's pretty similar to what was going on with GameStop a few months ago. Essentially, there's a lot of people that are short AMC. Right. And if the stock doesn't go down, here, wait, let me just get a sec to share the screen. Then if it doesn't go down, then the people that are shorting it are forced to cover it. So instead of being short the stock, they have to go out and buy the stock, which causes the price to go higher. And then when it goes higher, more shorts are forced to cover. So that's why it's called a short squeeze, essentially. But what's interesting about this one is actually there isn't as much short interest in AMC as there was in GameStop. So it's actually like a lot of people have been kind of surprised at how much this has moved.
And Aaron and
Yes.
Sharon, and you should know both. You guys both know this, or Sharon doesn't know this yet. There's a lot of reasons a stock goes up or down, and people, view it differently. So in the chat, Webcoin said AMC is up because they sold a lot of movie tickets. Another one said students got $1,400 checks last week, so they're going to go buy movie tickets. I mean, there's just a lot of reasons why a stock can go up. Now, a short squeeze is like what you just described, Aaron. Does that make sense so far, Sharon?
But yeah, but I have a question. What about Corella? Because that's a great movie that I feel like was just out. Like, does that have anything to do with it? Like,
Wait.
Corella?
What's Corella? Whoa. Where are we going now?
I don't know. You just said something about movies, so I
No,
just
is that like a new movie that came
Is
out?
that a new movie?
yeah, and it looks amazing. And I haven't been to a movie theater, but it literally looks like really good in my opinion.
So Sharon, here's what we should do. You should get tickets to what's it called, Corella,
Yeah.
and we should do some like Benzinga recon and see what the is AMC packed, is it not packed? Because maybe that will give us some insight on the overall company.
Yeah.
Sharon, that's half of my stock picks. Like I bought this BGFV because it's a sports store. It's $1.89. Now it's at 33. You could have retired on that, Sharon. With your money, Sharon could have put 100,000 in. It would be worth like 3.3 million today, Sharon. But but the reason I picked it is because I went to Dick's Sporting Goods and I saw the store was packed. So I'm like, this must be good for whatever. And that's an example. So that Corella one may not be a move on that because that movie is owned by Disney and that could be on the Disney app. So so it may not be just an AMC stores. But AMC has a lot of people. I mean, I have had 4 phone calls on AMC from people that were listeners to the show, and they're very passionate about AMC. All right, give Sharon. Do you have another question about the stock market, or do you have a question, an additional question about the stock market? Yeah.
Right. The second?
Yep.
No, I don't have a specific question right this second.
What about this, Sharon?
Go
Do
ahead, Sharon.
I was just going to ask her, do you know what an ETF is?
I mean, I hear about it all the time, but I don't know if I specifically know what it is. ETF is, I don't know.
All right. It's Sharon. We'll tell you. Wait, Sharon, your hand is covering your. Okay, there we go. All right. So Sharon, this is what an ETF is. This is a good thing to know. An ETF is a basket of stocks. So say you want to own Ford, GM, Tesla, and a few other automotive stocks. There may be an automotive ETF, and they buy the ETF buys those stocks. So instead of buying each individual stock, you can buy one ETF. And you could buy a solar ETF and it owns a bunch of solar stocks. It makes your life easier.
You buy a shopping ETF?
Yeah, I was just going to say you think retail shopping is going to come back and you want to own Macy's, TJ Maxx, all these companies, they're shopping or retail shopping ETFs. There's even, I think, some beauty supply ETFs where they'll have Sally's in there or Ulta Beauty all in one ETF. And you can just Google whatever industry it is that you want to buy. Like Raz was saying, it could be automakers, could be retail shopping, could be beauty, and you will find an ETF. If we're going to keep this going, I'm going to say
wow, that's cool. How did the ETF get created? Because I don't really know that.
So I think they're fairly new in relation to like the overall stock market. Like I believe the first ETF was in the 80s or 90s, but it was just invented from different funds as a way to kind of grab investors. So to say like you want to invest with us, say you're Roundhill or say you're Vanguard or Direction, you can say, well, we have this cool new fund that makes it a lot easier to invest in than picking individual stocks. So it's really just a way for people that might not want to spend the time and hassle like finding individual stocks, but say you think, oh, I really like the shopping space right now, or I really like technology. You don't have to spend the time vetting all these different stocks, looking at their financials. You can just go ahead and invest in that. Oh, and I do see we have our resident ETF expert on the line. He's probably here to correct me on something. Let's see. Spencer?
No, I have no idea what you're talking about. I just to hop on.
Well, we were talking about so we're doing our Wait What segment with Sharon where we...
Yes, I'm excited for this segment.
So we were talking about ETFs, and she was asking me, well, first of all, the first ETF, I think was like back in the 80s or so. But basically, I was just saying that the purpose of it is so that investors like us that might not have a lot of time because we're working throughout the day can pick an industry and invest in it without having to vet individual stocks, without having to do a lot of research. And it's just kind of of a...
Yeah, I mean, here's the best way I would put it, Sharon. When you you could do a bunch of research yourself and try to find good companies and invest in stocks, or just buy a basket and the basket holds.
The basket seems, it seems the way to go, in my opinion. From what I've learned.
Basket is the way to go, in my opinion. The basket is the way to go in a lot of people's opinions, and the basket is like, you know, in the literal and the like figurative sense, right? Like you're putting your egg by buying like SPY, for example, you're literally putting your eggs in 500 baskets, right? So like if any one basket like crashes and burns, you're okay, right? That's kind of the point. And most people should. It's almost counterintuitive, but most people, I believe at least, should aim for like average returns in the market, and the SPY is how you do that. You are the market, rather than try to beat the market and probably fail. You can just be the market, replicate the market, do what the market does. Market goes up, you go up. Market goes down, you go down, right? But you don't have to do a lot of research. You know, it's like boom, one click of the button, and you own 500 stocks. It's that simple. So,
Webcoin in the comments is asking, is AMC an ETF?
AMC?
No.
AMC is a stock.
AMC is an individual stock, but it will be in some ETFs, probably maybe some maybe like mid-cap ETFs or some retail.
Yeah, I'm sure there are tools that you can like look up. You know, if you want to say, I want an ETF that owns AMC, be like, well, you can look it up. ETFchannel.com has one. Maybe Benzinga Pro will have one too. Sharon, how you doing?
I'm great. How are you?
Is this the first Wait What segment, or am I out of the loop?
Yeah, I've never been on this before.
Awesome, welcome.
And I'm learning a lot.
What
I do have another question. Okay, so what would you say is like the hottest, like, because we were just talking about, like, I picked shopping because I don't know, it felt like that was necessary.
I'm the hottest. I'm the hot. Oh, sorry, you meant the stock. Sorry.
What is like the hottest like stock like topic right now? I mean, obviously I know Bitcoin, but if something is new into stocks, what's like we were just talking about retail shopping, but what's a area to look at? With like, I don't know.
What is the hottest topic today?
Sure.
AMC.
Well, we just talked about
No,
it.
she's asking like what like industry, like
Yeah,
so travel's been really hot over the past 6 months because people have been, you know, foreseeing this reopening. Oh, everyone's gonna want to travel. Everyone's want to get an Airbnb, a hotel room, want to buy, you know, hotel room for the weekend. Oh, 13 in the chat saying oil too, which it plays into that as well, because when people are traveling more jet fuel's being sold, more people are driving, more people's buying gas. So yeah, energy and oil have been huge. So yeah, Sharon, say you're like, oh, I think, you know, this summer is going to be even crazier than people think it's going to be. I think people are going to be traveling even more than what they think is. Then you might want to get you know, some exposure to a travel ETF or to some energy ETF. Or say conversely, you're on the opposite side of the spectrum and you say, I don't think people are going to be traveling as much anymore. Say you think that people are going to be still working from home, you know, in 6 months from now. Then you could buy some telecommunications, you know, ETFs, something like that. So the ETFs are a way that if you have a thesis, you can still play it without having to pick the individual stocks.
Yeah. So I want to show you one, Sharon. This is an ETF that only holds. It's the only like airline ETF. It only holds airline companies, right? Like Delta, Spirit, Southwest, United, JetBlue.
Delta is my favorite. Is it in there?
Delta's in there. Delta might be the number one holding. I'm not sure, but it's definitely in there. So check this out. Okay. So there's this whole see that big drop, right? That big drop right there on the chart, right? That was March and April of last year. That was when COVID hit. Okay. So basically from like mid-March onward, the question is, do you think the airlines are going to eventually get back to their pre-pandemic level, right?
For sure.
And this is dubbed like the reopening trade, right? You either believe in the reopening or you believe in stay at home, right? You can't really, they're opposites, right? Because and Jets is like the one of the poster children of the reopening trade. Again, because it's just airline. It only holds airline stocks, right? So you said you like Delta?
Yeah.
Yeah. So here, Delta, DAL, Delta. So
Ooh.
the chart looks the same. So
Red.
at any point in the last year, you could have said, I believe in Delta Airlines.
I do.
You do.
I think Delta is the best, and I think
Is it because you always get a second
But-
link?
No, I just think that their customer service, you can get through to them, and they are great. I do think they're a little bit more expensive, but I do think you pay for what you get. So I believe in Delta.
Is it? Do you like it just because they have their own special terminal at the Detroit airport?
No, not even that.
I like it because of that. Because that terminal is like the only place in the state you can get Chick-fil-A or one of. So that's why I like Delta.
No, I just feel like I love that they call you back. Like, you don't have to wait on the phone. They'll call you back, which is the worst. We have to wait on the phone for 2 hours for someone to get them. They'll call you back. So that stuff is pretty simple. If you're able to talk with them, they're maybe able to change things. I just feel like I guess it's the customer service. Really, that's what wins, in my opinion.
You ever been on the phone with Spirit? It sucks.
Yeah.
So anyway, if I can bring it back here, so you can look at Delta, you can look at go back to the Jets, which has Delta in it, right? And this has been a central question of the last 14, 15 months, right? Is will these stocks, first off, will the company survive? Because this was not a sure thing last April, last March, right? I mean, air travel went to basically zero, right?
Yep.
And you can literally Google, if you just Google list of airline bankruptcies, there's a lot of them. Delta went bankrupt, United went bankrupt. There's a lot of airliners frequently go bankrupt, right? So and when that happens, you as a shareholder, you get wiped out. You get nothing. You go to zero and you lose all your money. And then they come out of bankruptcy and then they try not to do it again. So the fact that are these companies going to survive? That was not a given last year. That was not a given. If you believed it, you could have bought Delta Airlines. Oh, this is Jets. You could have bought Delta Airlines for $20 last April, last March. It's at 47 now. If you were convicted, and you see on the chart that it's gone up, but it's not a straight line. It goes up, it goes down, it goes up, it goes down, it stops, it starts. This has been one of the predominant you asked what the big themes are. The reopening trade has been a big theme pretty much ever since we shut down last year. When are we going to reopen? When are businesses going to reopen? When are we going to be able to travel again and do all the things that we used to do? So you can see now, over a year later, Delta Airlines, we're still not back to where we were pre-COVID, right? Pre-COVID, we were at what?
I still think it's going to take a couple months, but I think it's coming.
So if you think it's coming, and again, you like Delta Airlines, then why not take a flyer? You know what I mean? Mm-hmm. On DAL, if you want to do it a little bit more diversified and say, well, I don't want to put all my eggs in the Delta basket. Let me put my eggs in the airline industry basket. You can go Jets. Same trade. You can see here. Let me just overlay it. You can do this in Benzinga Pro. You can see the two charts look pretty much identical. You look pretty much Delta's in purple. You can't even really see it. It's identical.
And purple, just so I know. I was going to say, does that mean negative? But I guess
no. Delta is. I'm sorry. Purple is Delta Airlines.
Yep.
And the non-purple is the Jets ETF that has Delta in it. So you can see.
And you can see Jets is doing better. Right.
Yeah. Well, this goes here. Let me zoom in. Let me just go the past here. Let's go the past. This goes back to January 2020. Okay. So here, January 2020. So yeah, Jets is a little. I mean, they're both down, right? Obviously, because pandemic. But Jets is a little bit better, right? Not by a lot. I mean, 13% to 18%. You save yourself five percentage points, but. This tends to happen with ETFs, right? You don't go down as much, but you also don't go up as much, right? Because it's more balanced.
Right.
So that's been like the big theme. It's like reopening.
Pretty much, it seems like though these ETFs aren't as risky. Is there as much reward?
Well, most of them are not. There are special ETFs that are extra risky. There are ETFs that use this thing called leverage, where you can basically be like, I want whatever this group of stocks does today. I want whatever they did, but I want you to triple it. So if the Delta Airlines goes up 1%, I want to get 3%. And these are called leverage ETFs. They're risky. They're meant to be used short term. But by and large, yes, you are correct. Most ETFs that don't do crazy things like that are generally less volatile than stocks. I like the financial advisor, like in the back of my head, is saying, don't say they're not risky, because they are risky, but they are generally less risky than stocks for the reason that you have your eggs in every basket, multiple baskets, right? That's kind of the point. So I want to show you that chart because like that reopening trade versus the stay-at-home trade is like a big theme of the last year. Because here, let me like show you. I
have a question for like a new time, trader.
Yeah.
How long would you say you have to keep your money in the market if you were, in order to make a return? I don't know if that's that's a good question or not. But
question. This is a really big question.
Extra $1,000, let's say.
Yeah. Okay.
How long do I need to invest it in order to,
Okay. So there are many schools of thought here. There's no right answer. Whatever I say is bound to piss some people off. My personal belief is that the best time to invest always is now. Now meaning today. Meaning whenever you ask that question, do it now. Especially if you're younger. Because if you have younger, you have one big advantage over everybody else, and that is time. You have time. Time to overcome mistakes. If you invested right before the dot-com bubble burst in 2000, or right before the housing market crashed in 2007, 2008, it would have looked really bad for you for a few years. But if you held long enough, let's say you bought the SPY. Let me show you the SPY. This is my favorite chart in the world, I think. Let me show you SPY. All right, let's zoom way out here. Okay. Let me zoom. Okay, so if you bought SPY and it peaked in September of 2000.
I don't know what SPY is.
I'm sorry. Good question. Thank you for telling me that. SPY is like the ETF that we use as a gauge for the overall market. It's the ETF equivalent of the S&P 500, which is like the main stock index. There are thousands of stocks, and we can't realistically like track them all. I mean, we can track them all, but we use the S&P 500 as like just a measurement, as like basically it's a ruler. It's a way to gauge the overall market. You got to take 500 of the largest stocks in that trade in the U.S. and you put them in on this list, and then we track the list. And then this ETF SPY just allows you to invest in that list. So these are the 500 largest companies in the U.S. Delta Airlines is on there, Amazon, Facebook, every company that you've heard of is probably on this list, right? Coke, Pepsi, whatever, they're all on here. Most of the largest companies in the U.S. are on this list. Think of like you hear like the Fortune 500, like as like if you're Fortune 500, it means you're like a big deal, right? This is like the Wall Street equivalent of that, right? These are like the largest companies in the U.S. So this is a proxy, if you will, for the overall market, because like nobody's going to realistically like pay attention to like 10,000 stocks. It's just like not. This is not a good use of anyone's time. But we can pay attention to the 500 largest stocks and then just like use that as like a proxy. Does that make sense?
Yep.
I'm trying to like, because I remember when I knew nothing about this. I'm trying to like make it simple. I hope I'm doing a good job.
Well, I just want to interject in here real quick. But yeah, Sharon, if you're ever curious, like on a day of, what's the stock market doing today? Whatever, you can just literally Google SPY price and it'll say,
yep,
up 2% or down 2%. That's you know the market's pretty much either up 2%, down 2%, and that way you're not just looking around like what's the stock market doing today? SPY price.
Great. Thank
Because
you.
you can do it with other.
That's cool to know.
So think of SPY like like the basket of the stock market.
Okay.
Okay. SPY.
ETF of the stock market.
Exactly. It's not every stock. It's just 500, but for all intents and purposes, 500 potato, right? 500, like that's really what people use as a gauge. Anyway, this was the very first ETF. They thought, well, the S&P 500 is the most widely used index, is what we cite when we refer to the market. Why not just make an ETF and allow people to invest in the index and just make it investable? So this is just a way to invest in like the stock market, 500 largest companies. So as I was saying, if you bought the SPY, let's say you're like, oh, I am 23 years old. I have my very first job. I have a 401k. Go me. I'm going to start doing some investing. I'm going to be nice, safe, responsible. I'm not going to gamble on .com stocks and pets.com and this new website called Amazon. What even is that? I'm just going to buy the safe fund that invests in 500 largest stocks, and I'm told that that's the responsible thing to do. If you did that in the fall of 2000, you basically were down on your money for, let's say you bought the top. You bought the very top, September of 2000. You were down on your money more or less for 8 years. We'll call it 7 years. 7 years. You were down on your money for 7 years. That stinks, right? That sucks. Now, that doesn't include dividends, which is just a cash payment that you get for owning stock in certain companies. But this is just like overall returns, right? You bought SPY in 2000. You bought the very tippy top of the market, and then we had the dot-com bubble crash. Then we had a recession. Then we had another bubble, right? Just when you got back to that last level, that same spot again, you're like, oh, it's 2007 now. 7 years later, I got my money back finally. No, we had another bubble. We had a housing crisis, right? And the market crashed again, and you basically didn't make your money back until, what was this? 2013. So like 13 years after your first investment, you're finally, like, if you bought that tippy top, right? If you bought that 150 top, then it basically took you 13 years to make your money back. Now, that being said, what's happened since 2013? Let me zoom out. Let me zoom out more.
I mean, correct me if I'm wrong, but 2010 to now has been like one of the best runs to the market of all time, right?
Yeah, we just came off like the best decade, like the stock market's ever seen. Now, yeah, go ahead.
I was just going to say, so you were doing it under the scenario where if you just threw a lump sum of cash in at the top at like 2007, right?
Exactly.
Conversely, if you were, price indexing yourself in, so doing like a recurring $100 investment, say once a month,
exactly.
I'd be curious what your return would be if you had started that like in that downtrend or however, because, and Spencer, I have a lot of friends that asked me, because they know, like, oh, like, I like to mess around with options on Robinhood, whatever. They're like, oh, I've been seeing all this stuff about the stock market. I want to start investing. And a lot of younger people, I feel like, are drawn in by these screenshots of people making thousands of percent returns on options. And I'm just like, no, just set a recurring monthly investment into SPY, whatever you can afford, whether that be $20, $100. And if you do that, just set a recurring investment into SPY. I'm not going to say it's guaranteed money.
It is not. It is definitely not guaranteed, but it's probably the safest way to invest, and also try to get some returns. Obviously, nothing is guaranteed, right? Bonds are guaranteed, right? You're guaranteed the fixed rate on your bond. Stocks are not guaranteed. By and large, they go up. They go up more than they go down. They go up 3 out of 4 years, I think is the stat. 3 out of 4 years, stocks go up.
But yeah, that's my personal thesis. If you set a recurring investment into SPY,
yeah,
maybe it's down over the next year, maybe even 2 years.
Yeah.
But over time, I'd
Yeah,
then-
I mean, you can even do like you can just Google, what's the term I would use? You can Google like investment calculator, or no, like here. You know what? Let's do this. I'm going to share my screen. Let's Google together. Oh wait, you can't see that. You can see that. Let's Google compound return calculator. Okay, compounding, aka the eighth wonder of the world, right? There's 7, right? Or are there 8? Are there 8 and this is the
No,
9?
you had it right.
Okay.
Eighth wonder.
Got it. This is the 8th wonder of the world. Okay, it's freaking amazing. All right.
So I want to do.
Yeah.
I want to do 100 a month.
Okay, so you're going to start with 100.
Right, and then the monthly contribution will also be 100.
$100 every single month for how many years?
Let's see. I'm 24 right now, aiming at a 48 retirement, so 24.
24 years. Oh, okay. The average rate, the average annual rate of return. Let's be really conservative. Let's just say you only make 6% a year.
Well, let's Google. What's the average return of the S&P?
It's like 8, 9, 10, somewhere.
All right, so let's go lower. Yeah, let's do that. Let's do 6.5.
Yeah, 6.5. Okay,
That's still conservative.
That's conservative. Let's not mess with the variance. Okay, so 6.5%, which is good. It's nothing to write home about, frankly. And
so what is the compound frequency? What does that mean, Spencer?
That's just like how many times do you want
to reinvest your profits?
No, it's how many times are we like doing this? Like calculating this. We're doing it once a year.
Okay.
All right. So so we have $100 a month is we're $100 is what we're starting with, and we're investing on top of that $100 every month for 24 years, and we're doing it in a fictitious instrument that will hypothetically return 6%, 6.5% every year. So our money is going to increase by 6.5% every single year, which is not an amazing. It's okay. It's not amazing. You could do a lot better, probably. Like the average historical return is like 8, 9, 10%. Anyway, calculate. So that $100 initially, plus $100 every month, which is again a very small dollar amount, will get you $65,500 in 24 years.
So let me just do some quick math. So say I just threw it in a savings account that had 0% interest,
or like 0.001 or whatever.
So 100 times 12, obviously $1,200 a year times 24 would be 28,800. So you'd have about $37,000 of profits due to the 6.5% you're getting a year in this scenario.
I'm sorry, I was answering the chat. I didn't hear what you just said. Paul Willis just corrected me. I said bonds are guaranteed. Bonds are not all bonds are guaranteed. Obviously, I should have clarified that. Municipal bonds, but like corporate bonds are definitely not guaranteed. So I'm sorry. What'd you say?
I was just doing 100 times 12, obviously 1,200 times 24.
Yeah,
would be 28,800. So just a little shy of 30,000. So in this scenario where we're actually investing it as opposed to just saving it, you'd have about $37,000 worth of profit.
Yeah,
and that's, as we mentioned, with the conservative 6.5%. I'd venture to say over the past 10 years, while the market's been doing well, the S&P return has probably been closer to 10%.
Yeah. And so, like, let's just mess with it a little bit. Like, let's just say every month we're going to contribute 200, not 100, 200. So, if $100 a month gets us $65,000 after 24 years, then $200 a month does not get us double that. It gets us more than double that. It gets us almost under $31,000 because compounding, because that's how math works, right? That's how 10% of 100 is 110, right? 10% plus 100, right? 10% of 100 is 10. You have that 200 is 110. But 10% of that number is not 10, right, it increases with that. That's just math. So compounding is just this showing that concept, and that's what people don't understand, right? That's why like when I say like the biggest thing you have on your side is time for this to do its magic, time for compounding to work in your favor. Even if you are the worst timer you have the worst timing ever, you bought right before the Great Depression or like right before the .com bubble burst or whatever. If you wait long enough, the odds are you will make money in the market if you just wait long enough. That's the truth. Obviously, there are things out of our control. We cannot control when we are born. We cannot control, like, for example, if you hit retirement age at 65, if you turn 65 in the year 2000, that sucks for you because all that money that you spent your career saving and investing, that your first decade of retirement had 2 bubbles, right? And that's out of your control. That sucks. That's unfortunate. That's the luck in all of this, but you can't control that. But by and large, investing over the long term, you will end up in a better spot than not doing so. I think that's the point.
And Jeff in the chat is saying, put that in your Roth and you don't have to give a cent to Uncle Sam at tax time. That is true. However, with the Roth, you just have a limit. I believe it's $6,000 a year that you can put in the Roth.
Yeah, there are limits. Tax advantage accounts have limits. Roth IRAs, Roth 401ks, all 401ks actually have limits, I believe. The 401k limit is, I think, $19,000 a year. And the Roth limit, and it changes. There are exceptions to this rule if you're older and you're playing catch up. The Roth, I think, is $6,000, but it goes up by, what does it go up by? Like 500 or 1,000 every year, I think. So
every year.
Yeah, 13 is saying it's $6K a year. So
yeah. Wait, so it starts at $6K. Like for me, I just opened one, but you're saying next year I can throw 500 more in it than I did this year?
Yeah. Well, yeah, I believe they increased the limit.
I don't know.
Yeah, they increased the limit. I'm not crazy.
But yeah, I mean, I don't know about you, Spencer, but I definitely have probably $200 every month that I could cut out of my expendable income that I spend on other things. That if I start doing this, I mean, look, at the bottom line, we did this conservative thing, 130,000, probably not enough for me to retire on, but does that get you a hell of a lot closer to that number, whatever the retirement number would be, as if you were just saving it? Then yeah, it gets you a lot closer. And
that's what I'm trying to that's what I want people to know. I know we're preaching to the choir, maybe to some extent here to our viewers, but that's what I want people to know, right? Like AMC and all that, like that's fun. That's great. That's fun. Maybe you can make a quick buck. That's awesome. But that is not a long-term plan. And even worse, if you're betting everything on one company, on one stock, that is also not a long term. I don't care if it's AMC or Amazon, or doesn't matter, right? Like that is a high risk, high reward, I guess, but extremely high risk plan that is not going to succeed for most people. Like if most people just bet it all on one company, it's not going to work. Because how do you know you're going to pick the one? Even if you really do believe in a stock like AMC, just using that as an example, or Apple or Tesla, you name it, whatever, right? You know what? Everyone has their own risk tolerances. Who am I to judge? If you want to throw it all in red, throw it all in red. It's not for me. Let me put it this way. It's not for me. I will never put, and it's why every stock that I own represents like 2% of my portfolio, right? I will never make an outsized bet on any one asset. I'd rather just bet on the overall market. But look, there are people out there that have gotten really, really rich betting on one stock or betting it all on Bitcoin. It's worked out for them. So who am I to judge? It's just not a sustainable thing for most people, in my opinion. But
right.
And I'm also not going to get rich overnight. So.
But there is a difference between doing that, like what you're saying, Spencer, basically betting on red, betting on a stock like AMC, versus if you are, say you do have time to, or it's just your hobby to look up different stocks, pick ones to invest in. You can easily beat that 6.5% a year, as someone in the chat
Yeah. Oh, sure.
Stratego tactics and tips. Every stock I ever bought, except one, eventually went higher after I bought it. Here's the kicker. It helps to buy good stocks at exceptional values. So all these guys that you read about, whether it be Warren Buffett, Michael Burry, they're all looking for great values. And great companies. They're not throwing these absurd sums of money into companies unless they feel great about their management team.
Yeah.
What they've done in the past, what their track record looks like, where they could go in the future. So if you're just betting essentially on stocks that you hear on Twitter that, oh, this stock's hot, this stock's moving, that's different than, really going in depth, looking at what companies are doing. So that's why you hear the term DD thrown out all the time. Do your DD, do your due diligence. And everyone, even for good investors, even for Warren Buffett versus Cathie Wood, their DD systems, what they do might look a little different, but at the end of the day, it serves the same purpose to determine, is this company worth investing in? If so, how much of my portfolio is it worth investing in? And yeah, that's my thing is, if you're doing it well, if you're finding the good companies, then you can probably beat that 6.5%.
The other side of that coin is how do you know the good ones? And there are ways to measure and judge and evaluate a company, but look at Intel, for example. Okay, here's Intel. If you bought Intel in 2000, you might still be underwater. Now I don't know, maybe not with dividends. I'm sure they paid a dividend. Actually, I don't know. Does Intel pay a dividend? Let's find out. Currently, so they do. So all right, with dividends, you're not underwater. But from a pure price perspective, if you bought Intel in 2000, you might be underwater. So stocks do not always have to come back. The example we use all the time on pre-market prep, right, is the banks, right? If you bought Citigroup pre-financial crisis, you're never making your money back. You're just not. That's just not going to happen, right? And all the bank charts look the same. They all like Bank of America, right? Actually, that one looks a little better. JP Morgan did come back, which is interesting. But Wells Fargo, right? Oh, that one is actually not bad. But anyway, the point is, there is no rule that stocks have to go up, that they have to go higher, that if you're down, that it has to come back. They won't, and that's why I prefer ETFs. There's a great real world lesson last year, if y'all remember. Wirecard, right? Wirecard was that company in Germany, one of the largest companies in Germany. It went belly up, right? It was a scam. It was a fraud. This company was basically in the Germany equivalent of the Dow Jones Index, right? Huge company, went basically belly up overnight. If you invested in Wirecard stock, you got screwed, royally screwed. But if you invested in the DAX, which is like the Germany ETF that holds Wirecard among other companies, then you did all right. Here, this is a daily. This goes back to 2019, but my point is, you can't even really see. I think that was in October of last year when the Wirecard thing happened, right? You're okay. One of the major components went belly up, and if you held the ETF that held Wirecard among others, you're okay. You escaped relatively unscathed, right? This is like the argument for ETFs in a nutshell. You had a company go bankrupt, and you survived because it was but one part of your portfolio.
That is the power of ETFs. When one gets hit, doesn't matter. The sector can still show strength, and you're fine. I did want to address Bill Big D in the chat said, I think having 50 stocks is too many. Okay. And this is somewhere where, Spencer, you and I may disagree a little bit because, I know, what'd you say? You don't have any stock that's more than 2% of your portfolio or something like that?
That's not true. I did. Disney is like the outlier. Disney is like what is this? Disney's like 8%.
Which owning Disney, this is a tangent, but owning Disney is basically like owning an ETF because they have their hands in so many buckets. I mean, they have, they own ESPN, the parks.
Rules are meant to be broken, and I broke my own rule with Disney. But like
that's a good exception.
Besides the point.
That's a good exception. But here's, Charlie Munger and Warren Buffett, who famously, are two of the most famous fundamental investors.
Right.
I don't know if it's I don't know who coined it between the two of them, but I feel like I hear Charlie Munger say it more than Buffett. But he calls diversification diversification. So he's basically saying, you don't want to spread yourself too thin. And Warren Buffett has a quote where he's basically saying, look, it's easier for me to pick 10 stocks than 100.
Yeah.
And I kind of tend to fall more on that side of things. Michael Burry, another guy, he at one point, after a lot of the money that he made in the housing crisis, where he shorted the housing market and made, do you know how much? I think he made like $1 billion, or his fund made like $1 billion off of like a whatever.
He made gobbles of money
when everyone else was losing money.
Yeah.
He took a lot of his money and put it into two stocks, Wells Fargo and Apple. And it's really like
Wait, that wasn't Michael Burry.
Yes, it was.
That was
Ryan Cohen. Sorry, that was Ryan Cohen. I'm getting them mixed up now.
Yeah. Ryan, a few years ago, the co-founder of Chewy, right? That was This was like in 2018, 2019.
Yeah. But Michael Burry is the same way, where he'll put high conviction plays.
Yeah.
Into a few things, which to me, like everything I've read about investing, whatever, it's like always diversification.
Yeah.
So I started looking into it, like, why are these guys doing the opposite of what? And it does make a difference if you have that much money to where you can afford to kind of take a gamble like that and then lose some. But I do think there is something to be said about as far as what Buffett's saying, as far as 10 stocks is easier to pick than 100. But for everyday investors that might not have as much time as they do to invest in stocks, then diversification is never a bad idea.
Yeah, and I want to make a point to Bill Big D, right? There is no right way. The only right way is the way that works for you, right? I have my own right way. It's right for me, based on my age, my risk tolerance, my all that stuff. Aaron has his own right way. Bill Big D has his own right way.
Right.
If your right way is to be like Ryan Cohen and put your entire net worth into two stocks, or to be like Pompliano, who's got like 98% of his net worth in Bitcoin, like if that works for you, then like that works for you. You know what I mean? Like there's no right way to there's no one way to invest. This
is a good way to put it. Stratego, Texas, and Sip said too many stocks is just as bad as just a few. So it's probably a good middle ground you can find.
Yeah, there's probably a good balance to have.
I apologize, by the way, for missing the Michael Burry, Ryan Cohen. Sometimes with these investors, I get them mixed up.
Yeah.
Thank you for correcting me there, Spencer.
It's a great because I remember that, and I was like, that was a couple years ago. That was like pre GameStop, and I was like, what is this guy doing? Like
which I think the Apple trade paid off really well, and then the Wells Fargo one not so much. But then now Wells Fargo has been doing a lot better. I wonder if he invested in Wells Fargo right after their big kind of scandal.
Yeah, it was after that. It wasn't. It was like 2 years ago, I think. But it was just it was such a crazy thing. Again, crazy for me. Clearly not crazy for him, right? Everyone's got their own method. And the best method is the one that works for you, the one that allows you to sleep at night and not sweat about, if you're laying in bed thinking about how much money that you're liable to lose on a trade, then you're taking too much risk.
That's why I can't have too much of my portfolio in any cryptos, because how do you sleep at night knowing you can wake up and half your portfolio is gone? I'd be up every hour in the middle of the night checking it, making sure that my Bitcoin or Ethereum isn't down 50% from the night before, which is completely, maybe not now 50% in one night, but they're certainly plausible to see a big drop overnight when you don't even know what's going on.
Yeah.
So
and there were some people last spring, right? February, March, April. There was people that were legitimately. I mean, a lot of us were freaking out. Rightly so. And that was a lesson, I think, to a lot of us, especially someone like me who, as I was in high school when the housing housing bubble burst, and so I wasn't investing then. It was my first real crash. There have been, we've had weeks, months, periods of downward movement, but nothing like that, right? And it was a lesson for all of us in pain, short-term pain, in volatility, and in risk, right? And I think a lot of people maybe learned that, oh shit, like I don't have the stomach for this. I don't have the risk appetite for this. I thought I did, but I didn't. There's a guy that we've actually had on before. His name is Aaron. He founded a company called Riskalyze. It's a platform for financial advisors. But his whole thesis is that we measure risk wrong, right? We are not good. We are not good at judging how much risk we can take. We think we are, but we're not good at it. And I think he's right. After last spring, right? Like I was freaking out, but I also didn't sell anything because I was like, well, I'm in my late 20s. I have time. But a lot of people I think learned the hard way. Like if you sold last, you had no way of knowing we were going to rebound the way we did. No one knew that. Okay, if you knew that, if you say you did, you're lying. If you bought last April, last March, you got lucky. Congratulations, you got lucky. But if you sold then, I think you'll learn the hard way that maybe you don't have the risk appetite that you thought you did, which is fine. There's nothing wrong with that. There's nothing wrong with saying, I don't have the stomach for this. I don't have the stomach to have 90% of my net worth in stocks when returns are not guaranteed. Maybe I need more bonds. Maybe I need more, gold, real estate. I don't know, some other asset, more cash, something else. Nothing wrong with that.
Yeah, which that's one way to mitigate that risk is raising cash, selling positions, having dry powder, as a lot of people call it, on the side. Another option, a lot of financial advisors advocate for having at least, like, say you have 100% in your long-term portfolio, long positions. If you have like 1% or 2%, like you're rolling, buying SPY puts, whatever, like that can help hedge those losses if something crazy like COVID happens and there's like a black swan event and the market crashes. Having a small percentage of your overall portfolio being short positions can help. Personally, I don't really like doing that because while the market's doing well, you're taking some of your profits off the top to have those short positions. But that is one option among many others of how to hedge a portfolio for an event like that. Obviously, with things like the COVID crisis that crashes the market, it's very, very, it's near impossible to predict these black swan events, to time the market.
Yeah.
So that's never something to aim for. I'm going to time the market. I'm going to buy right at the bottom. I mean, there were so many people trying to buy the bottom after the 08, and they thought, oh, this is the bottom. Throw some cash in here, and then it keeps dropping.
And that's the thing. We had no way. Like I do remember. I have a very clear memory. Last March, right? It was the last day we were all in the office. And we were all going to go remote the very next day. Everyone's like, gathering all their stuff and their computers and all their whatever they're going to need. And we were all like leaving for the day. And I remember saying to the guys, a couple guys on the news desk, I was like, for people in our generation, this is going to be a once in a lifetime buying opportunity. And I believe that. But I did not know that it was gonna the bottom was gonna happen like 2 weeks later, right? Like the bottom happened the day the Fed came in and said, "Don't worry, guys, we're going to backstop this. We are going to be providing support, monetary support." That was the bottom right there. That was the bottom.
So the absolute bottom was March 18th, I believe.
No, March 23rd, which was the day. I think it was a Monday. Yeah, it was a Monday. It was the day the Fed came out for the first time and said, "We are stepping in here," and that was the bottom. But we didn't know that at the time.
Well, I do remember there was a day. I thought it was March 18th. Maybe it was the 23rd. But there were some indicators, like every single day, from March, 1st or whatever to the 18th. There had been more and more selling each day happening. Like the volume of sales was going up and up and up. And then finally on the March 18th, it stopped going up. And that was for a lot of people signed that, okay, we reached the peak selling. And from there, you know, the market kind of started to go up, the VIX started to go down. Yeah. And I don't think anyone, even in the investing world, could have predicted the run that was going to occur after.
No.
But people were just relieved that, okay, this massive selling is kind of coming to a close or slowing down a little bit.
And my point was, like, I ended up, like, of course I missed the bottom. Everybody missed it. Like, nobody got the bottom, right? That's insane. So what ended up happening is I bought a little bit in April, a little bit in May, a little bit in June, a little bit in July, until I was fully invested, right? Basically. And so my point is, you know, you're never gonna get the top and the bottom. It's just not really how.
And I don't know about you, Spencer, but if you go to that kind of peak right before July, where it started to go down a little bit.
Oh, right there.
No. Keep going back toward that peak, but yeah, right there.
June, yeah.
I was like calling for a market top right there. I was like, how is the market like almost back up to where it was?
Yeah, this entire run up, we were all saying like this. Does this make sense?
This can't last. No, because the whole economy was shut down. I mean, no one was like producing.
Right. No
one was spending money, but the stocks kept going up. And if I would have, with 100% conviction, had told someone like, oh, if you've made 20% in this run, just take the profits, and then you would have missed out on another. So that's why it's impossible to time the market. If you just keep the $100 recurring investment into SPY, then you're guaranteed to bank on this when it keeps rising up, even when you're not expecting it to, or as you said, when it crashes and you miss that once in a lifetime buying opportunity, it's still there, even if it's not at the very bottom.
For sure. All right, I do want to bring on Elliot Lane in a second, but before I bring him on, I just want to make one more point. Like we always talk about, people on Reddit talk about, you know, going up against the hedge funds and against Citadel, right? And beating those guys. How do you beat those guys? You buy and hold. That's how you beat them. You, me, we are not subject to the pressures of quarterly returns, annual returns, having to justify our existence to our investors. We don't have to do that. We can win simply by buying and holding. And I think a lot of people with AMC and GameStop have realized that to an extent, right? That's how you beat them. Like we cannot compete with HFTs, the high frequency traders. We can't compete. We can't beat them. They're way too fast, have way too much money, way too much resources. The way to win is to just not trade against them. It's to just not play the game.
When you say HF, are you talking specifically about like quantum ones where they have like computers doing the algorithms doing it? Or?
Yeah, I'm talking about any advanced trading company, whether it's a HFT firm, like whether it's a market maker, whether it's a hedge fund, any institution, right? You can't win by playing their game. You win by not playing their game. You win by buying and holding. That's how you win.
Seth in the chat saying hodl for Harambe.
I mean, but like that's the truth. Like that's you win by owning SPY for 40 years. That's how you win. That's how you beat Citadel.
Yeah, RIP. I saw over the weekend. It was like 5 years to the day that
really?
We lost Harambe. Yeah, it didn't seem like that long ago.
Wow. Okay. Yeah, market is leaking. I mean, we've been leaking all day here, so nothing really. I don't know if there's news.
I do see some tickers being thrown out in the chat right now. ELY. We've been talking about Callaway a lot recently. Yeah. I mean, I like the company. I like the stock. I don't know is it almost at $40 right now, like $38 or something.
Let's check. ELY.
This is one that got killed when COVID hit. I was actually working on a golf course at the time, and it was. I mean, it literally went down to like I want to say $5.
Everything went down to single digits. I want to keep talking about this, and I'm going to bring on Elliot Lane in the background. I want to find out if he is also. But keep going about this, Aaron.
So I was working at a golf course. I was working at a golf course at the time, and right when COVID hit, there was definitely some kind of fear because we had a lot of older members. Maybe they weren't coming out. And then, as like literally it only took like 2 weeks, and then people started funneling in because it was like the one thing you could do outside. They could still see their friends because you're all outside,
Right.
you know, whatever. And we started breaking the number of like daily rounds we were doing by incredible amounts. I mean, on a normal day pre-COVID, we'd do like 120 rounds of golf.
Yeah.
We were doing like 200 rounds of golf. It was like a 60% increase or something.
Damn.
And me and some other guys worked in the pro shop and stuff. Were like, should we buy Callaway stock or whatever? And some of them were worried about because a lot of their manufacturers in China,
Sure.
if the factories were going to stay closed, all this stuff.
Sure.
And then of course Callaway bought Topgolf at a significant discount because of what I think was going on with COVID. And now that's part of what's driving this reopening play for Callaway is that not only is golf really hot right now, and that's kind of a question mark for me. Like, is golf going to stay as hot as it was during COVID, beyond COVID? Which my personal thesis is that for a lot of these people that got into golf during COVID, they're here to stay. They're going to be buying clubs for the next 20 years. Because once you start golfing, it's very hard to, it becomes people, they say you get the bug and you just keep doing it. But I know a lot of friends my age, kind of young 20s, that got into golf during COVID for the first time in their life, and now
Aaron Bree, I'm in that group. I'm not in my early 20s, but I just golfed for the first time in my life like a week and a half ago, a week ago.
So now do you feel the itch to go back out and hit balls again?
Absolutely, I do.
Okay, see, there you go. I mean, what?
Elliot Lane.
What's up, guys?
Do you have the golf bug as well?
It's one of those things I wish I had.
Yeah.
Like, I have the golf bug because of those adjacent to me have the golf bug, if that makes sense.
Yes, it does make sense.
It's one thing that, like, if I was ever tasked with taking a business partner out or a client out or an investor out, I would make my company look pretty bad.
As would I, but hey, at least I have the bug.
Hey,
All right.
Raz runs the business for a reason.
Because he's good at golf. Okay, Elliot Lane, I asked you on here just for a second. I don't want to take up too much of your time. We're going to end the stream in a few minutes, but before we do that, I wanted to give you a chance again to plug the CCC, the Cannabis Capital Conference. Starts Thursday. Thursday at what, like 9 o'clock? That's when the first
kicking it off, y'all. Thursday early. We're doing right out of the gate. We're starting off with, I think, one of the cannabis stocks that's in anybody who has like a cannabis model portfolio has this company in their portfolio, and that's Grow Generation. That's GRWG.
The Home Depot of cannabis, right?
Say what?
The Home Depot of cannabis?
Home Depot of cannabis. They're ancillary to the space, lighting, kind of hydroponic type company. Huge stock. I own them as well. And then their second day, right out of the gate there, we're opening with True Leaf. They are probably one of, if not the leading company on the East Coast. One of, I'll say. There's some others that could definitely take that cake, but they just made a huge acquisition that they're going to talk about, I'm sure. Kim Rivers is probably one of the leading women in cannabis. Maybe a little plug there for the next show, Women in Cannabis. But guys, I'm super excited because not only are we going to have the C-suites from most, if not all, of your leading public companies in the space, we're also tasking John Najarian, Tim Seymour. Jason Wild is going to come on with Chris Webber, basketball player. Yes.
Wait, that Fab Five Chris Webber?
That Fab Five Chris Webber.
He's the one that made the called timeout, right?
Yes. Don't
sorry. Now he's not going to come.
Do not bring that up on Thursday. Dear God.
Oh,
Chris, if you're watching, I'm sorry.
Yeah, you might be cut off for the rest of the week after that one. But it's we're gonna have great education on what to look for in cannabis stocks, where the cannabis industry as a whole is headed. We're gonna have ETFs there too, Spencer.
Yeah.
Advisor shares. Defiance ETF is gonna be leading a panel with psychedelics companies, X-Fido, Mindset. So this is going to be, I think, a very interesting event if you want to invest in the cannabis space or even considering it. You want a few companies to put on your watch list. We're going to have, I think right now we probably have 30, 40 public companies speaking at this event.
Nice.
I'm excited.
2-day event. We're talking about doing DD. This is how you do it. This is how you do DD. This is one way to do it, is to hear directly from these executives, right? A lot of them don't make a lot of public appearances. They speak every quarter, right, when they have to with their earnings release, but then they don't speak a lot in between quarters, and they are here, right? So 2-day event, it's free. I'm just scrolling way down. There's a lot of agenda. Oh my gosh. Okay.
Yeah, we got a ton of content.
It's a big agenda. Anyway, the link is up on the screen. bzcannabis.com. It is free. It will be right here on YouTube. You just go here on Thursday and Friday after pre-market prep, and you'll see it. And BZ Cannabis to see the agenda, see who's speaking. We got panels. We have presentations, stocks, ETFs, private, public, the whole yards, right?
Yeah, if you want to put your money into a private company, we'll have some there too, in case you are an institutional or accredited investor.
And we have one that's private, that's going public, right? Isn't Gage going public,
they are public on the CSE. They will be listing on the OTC probably not too long after this event. And then Flora Growth, they just went public on the NASDAQ. I think FLGC, if I'm not mistaken, is their ticker. They will be there. The Glass House Group going public via SPAC is going to be there.
All right, Bagwell 712. This is the downside of virtual events. Right.
October.
This is the downside of virtual events. No product samples, but when we go back to real events, maybe some product samples. I'm just
wait.
Depending on the state.
Well,
yeah.
Obviously.
Well, I think next one, maybe potentially New York, maybe potentially October. I don't know. And it'll be on the way to being legal at least, so decriminalized at least.
Did PowerHour just get an exclusive scoop on that? Or is that from
I said maybe.
From unconfirmed sources?
Yeah. That's a rumor.
I don't
report on
know
rumors.
That, y'all. That's not official. But of course, Benzinga is looking to get back on the train and really, dive back into these markets head first, because that's where you get a lot of this action happening. And that's where it's happened historically.
Elliot, I got a quick question for you before our programming at 2. Do you know how you can win a free share of Tesla?
Only by watching the entire day of Benzinga YouTube.
That's one. No, that won't do it. That won't do it, actually.
I don't know, AB. Tell me, man.
How do you do it?
I'll let Spencer tell you.
You'll let me tell you? I don't want to tell you. I'll just play a video instead.
Thanks.
I just put the link in chat right there. It's in the description as well. You can win a free share of Tesla by going to that Gleam contest. If you want to know what the YouTube code is, it's SLIMERAZ. I can't imagine where that came from or why we made the code that, but that's what we did. Elliot Lane will be moderating, I should mention. Or wait, what's the term? Is it MCing?
MCing. Technically. I'll be moderating a few pieces of content too.
MCing one track of the Cannabis Capital Conference Thursday and Friday right here. And I'll be watching, I'll be trying to go back and forth between yours and your brothers, but we'll see who wins.
Me.
Okay. Elliot Lane, always a pleasure.
All right, y'all.
Sir,
Thanks so much.
All righty. It is 1:59. Elliot teased there for a minute our next piece of content. We're doing a special show coming up right now, in about a minute from now. We've gathered together, I believe the number is 7. Yeah, 7 executives from around the cannabis industry talking about views from the C-suite, right? Women in cannabis, women leadership in the industry. We've been trying to increase the diversity of ideas on our stream, and doing more special shows like that tackle like real problems, right? Or real trends, things we want to change in the industry, and this is one of them. So Patrick Lane, is Elliot's brother, is going to be hosting a show right about now, actually, where we talk about women in cannabis and how they can break into the industry and do more. So with that being said, everyone smash that like button. Please, please, please smash that like button. Subscribe if you haven't already. Again, we're giving away a free share of Tesla in honor of our soon-to-be 100,000th subscriber. Check that out. Aaron Bree, any final thoughts before we hop off?
No, I was just going to say, kind of reiterate, smash that like, subscribe. We did a little bit of a different power hour than we normally do today, a little change of programming, no get technical. So if you enjoyed this content that we don't normally do, let us know by smashing the like, leave us some comments, and email powerhour@benzinga.com. And
I think that's a wrap.
That's a wrap.
Let's end this thing.
We will see you over at the Cannabis Hour at 2 o'clock, starting now.